Hi, Michael Glennon from Glennon Capital. We're doing a video on Brickworks today. It's one of the positions in the portfolio. It's a reasonable sized position in the portfolio. A lot of people have asked me about Brickworks, why we own the company. It's a big business, $2.8 billion market cap. Although if you look at the scheme of businesses that are listed both here and internationally, it is still quite a small business. It's got a dominant share in building products in Australia, but it's not just a building products business. They've got a significant property portfolio, they've got an investment portfolio, and now added to the Australian building products business, they've got a US building products business. So they made a couple of acquisitions last year, and it's that US building products business that really excites us. So the share price is underpinned by a very strong dividend yield. It's 3%, but it's grown. It's got a history of growing that dividend over a long period of time, so that gives us some comfort. We think significant profits will come out of the US building products business. US building products, the brick market, is a long way behind the Australian market, so there's significant opportunities for Brickworks to make acquisitions in that market. They've proven very successful in Australia at buying out businesses in that segment, rationalising plants and things like that, getting them operating efficiently, getting prices up. So you've got a management team that understands what they're doing in the building products market. You've got a very big market, 10 times bigger than the Australian market for building products in the US. Bricks are used all through the US, and there's a lot of players over there. So it sort of reminds us a little bit of what happened with Copart, which is a US business listed in the US that grew from a very small business to quite a large business in terms of rationalising scrap yards and recycling cars and things like that. They do a lot of online auctions for insurance sales of damaged vehicles, and we think that sort of track record, well, that example is what will happen with Brickworks. So we're quite encouraged by that. We think that the US building products business will be very big in the Brickworks business in a few years' time, just because we've seen what's happened here. Also what happened with Copart, and I recommend to you reading the book on Copart and looking at the share price, to see what can happen when you consolidate industries in an industry that hasn't been consolidated to date. So there's that opportunity for Brickworks to do that consolidation in the US like they've done here. So we think it'll be very attractive for them over there. As I said, they've expanded quite aggressively in the US already, 3 acquisitions in the last 12 months. They haven't paid a lot for those businesses, so it's quite attractive, the multiples that they are getting the businesses for. We think they'll have to pay more over time for those businesses. But management's also done a good job in Australia of creating different divisions. So the property business started out from doing property developments on the old brick pit sites. Once the clay was exhausted in that pit, they then go off and do joint ventures and develop those sites. So there's immense opportunity if they can translate what happened in Australia and do the same thing in the US. So that's rationalising an industry, looking to do things like developments on the sites, when you run out of resources in the site that you're getting your natural product from. They're being very innovative about the products that they use and the markets, and really expanding the market for brick and architectural products. So look, we like Brickworks. We think it's going to do well for us. We think it's got a good yield for a big company, and it's got excellent management. So it's one we've got in the portfolio that we think over the next few years will do very well based off the growth from the US business. So I'm Michael Glennon, and thanks for watching.